this is the dashboard page on Prism's app. So this is just the homepage of app.prism.zone. People who've used it a little bit know that these are, what tokens actually moved the most in the last 24 hours. So this is 24-hour price movement here. So you can see that if someone bought yINJ with the SEP24 expiry, they would have made 33% in the last 24 hours. Ignore AWU. I'm not sure why people are aping AWU. Like there's a big airdrop coming. I'd say like fun to trade, but I'd wait until the airdrop drops for there to be more to do with it. And then here you've got injective, C injective, P injective. So these are the principal tokens. And so here you've got your top pools. I'll just do this side before we look at the top yield. So your top pools, this is all real yield. So there's no incentives here. This just gives you a taste of like how kind of like superior the liquidity pools are on Prism compared to other liquidity pools that you might be used to. So you've got the ATOM yield LP here versus ATOM is yielding you nearly 22%, whereas ATOM itself is yielding something like 16 or 17%. So you're a liquidity provider here, and you're earning much higher yield than you would be with just plain liquid staked ATOM at the moment. And then over here, this is the fun bit. So this is all your top yields. So pATOM DEC24 has a yield of 25.93%. So let's look at what does that actually mean. So if I go here and I go to earn and I go to principal and yield tokens, that's going to take me to this page. I want to look at ATOM, so I click ATOM here. Hopefully everyone can still see my screen. So here we've got like 25.93%. What does that mean? What do these numbers mean? That means that I can buy one pATOM now, and it's going to cost me $5.74. And at maturity date of 31st of December, 168 days, that one pATOM is going to be redeemable for one ATOM. So at current prices, that means $5.74 now is going to be worth $6.39 in 168 days. So that's hopefully kind of explains the best way to think about it. Like we put this how-to section in here. So we realize it's painful sometimes having to like go through docs on websites and switch between the app and docs. So we put like a little how-to section here so you can learn about maturities and principal tokens. But really, what is I buy one pATOM now, it costs me $5.74, and in the future it's going to be worth one ATOM or redeemable for one ATOM on the 31st of December 2024. So that's like buying out of at a discount, which effectively means you get a fixed yield. Because I know that if I buy it now, then it's going to be, if I buy it now, I spend $5.74, and in in 168 days time, it's going to be worth one ATOM, which is currently worth $6.39. So another fun way to look at this. So we put these charts in here so you can see kind of like historically how the prices have moved of each of, pATOM, yATOM of each of these two different maturities. And then the other thing to remember that's kind of different to what people might be used to is that obviously this amount of cATOM here is what's required to mint one pATOM and one yATOM. What happens if someone buys pATOM? It pushes up the price of pATOM, just as with any normal token. Someone buys it, pushes the price up. But that means that the price of yATOM has to move lower, because one pATOM plus one yATOM will always equal the value of one ATOM. So you can buy this thing now and hold it, and you know that in 168 days, you'll get a guaranteed yield of 26%. Or you can buy this thing and think, okay, well, 25 26% is too high here. The market is going to realize that 26% is too high, and they're going to come and buy this. And as they buy it, it pushes up the price, which means the discount is lower. And so that means that the yield will actually end up moving lower. So one way I like to look at this is you just go here on the, so I just went to the swap page here. So swap, and I will put in ATOM here, and I'll put in pATOM deck 24 that we were just looking at, and I'll switch them around so it's easier. So I just click that little thing in the chart there. So hopefully everyone can see my chart here. So what does this mean? Effectively, I spend 0.88 of an ATOM now, and in 168 days, at the 31st of December 2024, this will go to 1, and it'll be redeemable for 1 ATOM. So I buy something for 0.88 ATOM, and it's going to be worth 1 ATOM in the future. That's like hopefully a very simple way for people to think about it. And because as people buy pATOM or sell pATOM, the price of it moves around versus ATOM. So, you've got opportunities here where, let me do, I'm just trying to remember my trading views. Where are the labels? Give me 1 second. And there's text, potential, so price label. So someone was able to buy pATOM here at 0.682. So they were able to buy it for 0.682 of an ATOM. So that's a huge discount that they bought pATOM at, knowing that on the 31st of December it's going to be worth 1 ATOM. Someone ended up buying another here that they ended up, you bought it here, and it's like, okay, they bought it at 0.81. So they're buying at a massive discount. And at the moment, you can buy it at 0.88. But that's the great thing about it. Like the price of pATOM moves around, and the lower it is relative to ATOM, the bigger the discount you're getting. And the discount is where they say it's a guaranteed yield or a fixed yield. So I would say the earn table here gives you kind of like a good high level view on the yields, and then come to the swap page and look at the price of them and how it's moved around to decide whether it's kind of a good opportunity to buy. Because over time, this is just going to move. This is all just, everything's going to move towards 1. It has to move towards 1, because 1 pATOM is going to be redeemable for 1 ATOM on the 31st of December 2024. Right, I feel like I might have bored some people to tears, but it is guaranteed yields, and hopefully that kind of like explains why it's a fixed yield and why it's a great opportunity to buy ATOM at a discount to kind of like grow your stack, and why you don't just have to buy and hold it. You can buy it when it looks cheap and sell it when it looks high, and just trade this range. Buy here, sell here, buy here, sell here, buy here, sell here. Buy. It's moving like any other asset, except you're growing your ATOM stack the whole time. And this works for Injective, this works for Osmo, this works for Luna. So does that kind of hopefully explain to people why pATOM is a discount token or a fixed yield token, and kind of how it works a little bit? Hopefully. Give me a thumbs up if it's worked.
The ones and twos.
Yeah. Okay, cool. All right. Well, I hope that has been a little bit helpful, and then I'll move on to Pulse Trade if people kind of know. If anyone's got any follow-on questions on that, or that isn't particularly clear, then let me know, and I can go over it a bit more. But this is my kind of go-to. Like, go to the earn page, have a look, see which yields look kind of interesting, and then go to the swap page and chart up the token versus the underlying asset, and see whether and see when looks like a good time to buy it, kind of like buy it or trade it. Cool. For people that understand what a liquid staking derivative is, a liquid staking derivative is where you deposit your ATOM, for example, into a protocol or an app like Prism, and Prism will stake it on the Cosmos Hub and start earning staking rewards, and it'll issue you a token that says, you've deposited some ATOM with us, we're going to stake it and collect your rewards and auto compound them for you. And then when you want it in the future, you can come back and you can say, hey, I want the ATOM that I've earned back. And we give you your 1 ATOM back plus all of the rewards that you've accrued. So liquid staking derivatives actually have like a sort of fixed exchange rate. So for example, if you come here on Prism's liquid staking derivatives, you look at ATOM here, 1 ATOM is worth 0.9823 ATOM. What does that mean? That means because ATOM's been, your ATOM that you deposited has been earning staking rewards, that it's only going to cost you 0.98 of an ATOM, of a cATOM, to get back 1 ATOM. So this is always kind of like the fair value of 1 liquid staking token, which is cATOM here. So what you can see is that there's been lots of trading going on, and the price of ATOM and cATOM moves around. So I'm back on the swap page here, and you can see that the price of cATOM and ATOMs move around. Like, so you know the fair value is 0.98, but you can see here that it's gone up to 1.27 or something like that. So that means that if you spent 1 cATOM, you would get back 1.27 ATOM, which is crazy when the fair value is 0.98. So you can see here that this has been moving around all over the place, providing kind of opportunities for people to grow their ATOM stack. This is the same for pATOMs and the ATOM LP tokens, same for injective osmosis and everything. But the underlying assets have a fair value, and because of people buying and selling and trading, they deviate from their fair value, which gives you an opportunity to buy when it deviates and hold, and then take profits when it normalizes. So here, for example, ATOM and cATOM have deviated. Like, I'll flip the chart around. Say for argument's sake, it's worth 1 here. 1. We know it's actually the other way around. This is ATOM versus cATOM. So this means that 1 cATOM will get you back, say, 1.02 ATOM. And what you can see here is the price has moved around a huge amount. Now, what you can see here in the chart is someone, me, just to show for this example, set up a pulse trade. And what the pulse trade said was, okay, cATOM is trading super cheap versus ATOM. So anytime cATOM is trading really cheap, let's swap some ATOM and buy some cATOM. So all of these lines here, you can see, are little buys happening every time cATOM is below its fair value. So you can just set this up yourself as like a little arbitrage that says, look, if the price is below a threshold, then just buy a little bit for me every single time over a defined time period that I want to do. So ATOM keeps on deviating from, or cATOM keeps on trading very cheap. So this, all these little buys are saying, okay, I'm going to buy cATOM every time it's trading cheap. Another way to look at this is you go pulse trade, and the pulse trade in question here is this one. So you can see what's happened here. A pulse trade got set up that said, it's saying sell 100 ATOM for as many cATOM as possible, and do not do a trade if the price is if you're getting less than 1 ATOM back per cATOM. It says do these trades every minute, And then this shows you the effective price you got during the pulse trade. And the fun thing about pulse trade is, even though I've said I want to sell 100 ATOM, and I only want to sell 0.99 ATOM per minute, or 0.099 ATOM per minute, it only actually takes this amount, the amount for each next step, out of my wallet. So I retain full custody of all my ATOM, and I only do the 0.099 for the next step, which happens every minute. And what happens is, every minute Pulse Trade checks, the limit price here is 1. So every minute Pulse Trade checks, is the price below 1? Okay, let's buy 0.099 ATOM. Okay, next minute, is the price below 1? Okay, let's buy 0.099 ATOM. And here, for example, you can see the price got up to 1. Pulse Trade checked and was like, okay, the price is 1. So we're not going to buy any ATOM here because that's below our limit price. And you can see that's happened here with the limit price, happens here with the limit price. So no trades are happening, no trades are happening. And then someone does a trade that pushes the price back down again, and Pulse Trade then starts buying every minute. So I'm obviously biased, but I think this is super clever. And the first time this has ever been built into the core of a blockchain anywhere, as far as I know. And you can just see from the sort of trading patterns here, like how well it's working, with all of these kind of diagonal lines from just small incremental buys happening. And it means that rather than buying all in one go, your average price gets smoothed out. So when there's a big sell like there is here, you then start buying again at the much lower level. So it sort of smooths out your average price. So that's kind of like how Pulse Trade works. We're going to be making some changes to the UX to make it kind of like even easier for people. But what I would say is just go on Prism and leave some limit orders. You know, say I want to swap some ATOM to some cATOM, or if pATOM dips in price and is giving a really big discount, let me buy some pATOM. So it's a super powerful tool for helping you kind of grow your stack. Has that kind of explained, I guess, a little bit about Pulse Trade and what it does, hopefully. One thing that is, we do get a lot of questions on, is providing liquidity. So I keep talking about the AWU airdrop. This is also going to be important for the Prism launch campaign. These 4 pools, so go here, go to earn, go provide liquidity. You can also go to dashboard and click provide liquidity here. Dashboard, as I said before, like look at the pools to see kind of like the yield that you're getting on these pools, and you can kind of like see how attractive it is relatively. You know, one thing people don't realize about pool tokens, or I just think apps generally are quite bad at showing this, is that if I hold ATOM, I'll sit there and I'll look at CoinGecko, or, you know, whatever your price source is of choice, and be like, okay, my ATOM token's going up in price or going down in price or whatever. But if I'm a liquidity provider to like the ATOM USDC pool on Osmo, no one's really showing me the price of my LP token. Like, I know ATOM's moving, so the value of my share of the liquidity pool must be moving, but no one's saying, okay, well, you're up 5% or you're down 5%. So we think that's bullshit, and you should be able to see like how your token is doing, because if you own a token, a liquidity pool token, then you're exposed to the price of the assets in the pool because you own a share of that pool. So, for example, here, you know, I go to the tokens page. Tokens page is we're going to be adding some more stuff to this actually to make it even more useful, but more of like a CoinGecko type page or CoinMarketCap page for people. So I go here and I'm like, well, okay, actually, you can see the price change over the last 24 hours, and you can also see the yield, the current yield that's on offer. So I can be like, okay, well, actually, if I held the ATOM yield pool token, that actually moved 3.5% in the last 24 hours. And ATOM moved 3.5% as well. So actually, it's kind of moved 1 for 1 for that, which is great. But if I held ATOM, I'm earning 0% yield. But if I held the LP atom yield token, I'm earning 21.2% yield, or 21.87% yield if I held the LP atom yield LP token. You can also see, obviously, like how much the pATOMs and yATOMs and etc. moved in the last 24 hours as well, and their respective yields. And so that is the tokens page. So I'm like, okay, well, I can see this is doing well. I can see that this has a high yield. So I think I want a part of it. So then it's like, okay, well, what is the LP atom yield pool, LP token? It's got a funny name to it. Definitely up for any suggestions from people about like what names we can give these things. But it's like, what actually is that? Like, it looks like it's done well. It looks like it's got a big yield. I want a piece of it. So you go provide liquidity, and you click here, and this is the pool. So atom yield LP atom. What that really means is it's the liquidity provider token. So your token you get when you deposit liquidity into this pool. It's that token versus atom. So why have we done that? Because yield pools are special. Like, yield pools are the pools that contain pATOMs and cATOMs. So and they require a special kind of a special kind of trading formula, or a special kind of like code to create these pools. So this pool works for all pATOMs and cATOM. And you can see here actually the weight of assets in the pool. So if you provide liquidity to this pool, then you're gonna be providing liquidity to a pool where the weight is 12% of this atom, 9% of that, 7% of the pATOM, and the pool is 70% cATOM. So if you provide liquidity to this pool, which I always recommend doing it with zero price impact mode. With zero price impact mode, you would provide your cATOM, and you'd end up with some pATOM. You'd end up with a liquidity provider token. That means you own a share of this pool and these assets in this pool. So that's the kind of like the way to think about providing liquidity. And obviously, because you own a token, that means you own a share of these assets in the pool. As these assets move around, so does the value of the token that you own. So when's a good time to own this pool token? A great time to own this pool token is when you see that yields are high on pATOM. If yields are high on pATOM, that means you're owning some pATOMs here that have a high yield, and you're owning cATOM as well. When's a good time to take profits on your LP token position? When pATOM prices have moved up and yields are high, yields are low, because if the price moves up, yields are low. And that's a good time to take profits, and maybe switch out of the LP token and go back to just cATOM. So that's this pool and what this pool creates. And so you get a liquidity provider token when you provide liquidity to this pool to say you own a share of that pool. Now, what you're doing here is you're taking that liquidity provider token and then pairing it with some atom and providing liquidity to this pool. And actually the weights here are 10% atom and 90% LP atom yield. So this means you own 90% of what you own when you provide liquidity here is that pool that we were just looking at, and then you provide 10% atom. So why is this pool better than the other pool? Well, in the other pool here, all of these tokens are earning a yield. cATOM's earning a yield because it's a liquid staking token, and pATOM are all discount tokens with giving you a fixed yield, like we spoke about earlier on. So actually in this pool, 90% of what you have is earning underlying yield, and 10% of it is atom, which actually doesn't have its own yield. But what happens is, because people trade between atom and the underlying assets in the pool, so if someone wants to swap atom for pATOM, it needs to go through this pool, and then people will pay swap fees. And so as a result of that, even though you're not earning 10% yield on 10%, the swap fees that people pay to trade against your liquidity that you've put in the pool, overcompensating you for the 10% yield you're losing. So here you can see you get internal APR, which is the yield on LP-ATOM yield. That's earning you 19%. And then the swap fee APR, so all the fees that people are paying anytime they swap between ATOM and any of the assets in the liquidity pool, are earning you 2.7%. So that's where you get your 21.87% for. And we're adding a button today, another zero price impact button here today, so you can instantly provide liquidity to this pool with just one asset, so just ATOM. That is, I realize that's a little bit technical. We'll try and provide a video on it as well. But hopefully a lot of people here are familiar with how you provide liquidity, and Prism's just slightly unique in that our pools contain multiple different assets that have multiple different weights. So normally liquidity pools are 50-50 weight. In Prism, they're completely flexible. So here are the weights on this one, and then on here it's 10% weight to ATOM and 90% to LP-ATOM. That is hopefully explains a little bit about that. I haven't had anyone telling me I'm completely boring them to tears yet in the comments. So hopefully that's been helpful. Like liquidity providing on Prism is this is all unincentivized yield. So I challenge anyone, or I'd love to see it if someone can show me unincentivized yields or real yields like this anywhere else in DeFi. I would love to see it if someone can tell me anywhere else they get that on ATOM, and that's why we created Prism, so that you can get these high real yields. And then imagine what happens to this when we start adding Prism incentives on top of it. So please, if you find high real yields out there for ATOM, please let me know. But I think this should be the highest, and so. Hopefully you now have like an understanding of what's driving those high yields on ATOM if you're a liquidity provider for ATOM. Hopefully people have found that helpful today. Like I'm more than happy to do more of these if people find a little run through like this helpful. Please, even if you either write in the comments now or later on, like write your suggestions of like what don't you understand or what would be helpful for us to kind of like provide a video or do, and then we'll do that. And we're going to be upping our YouTube content as well, so you're going to get more video tutorials that you can refer back to. But first and foremost, we built a product that we want people to use to make money. As you can see from some of the stuff we ran through today, there's lots of very good money making opportunities. So whilst you're waiting for airdrops, might as well also earn some free money on Prism by learning how to trade on it, would be my suggestion.